ഒരു കുഴപ്പമില്ല. ഇവിടെ എന്തോ സ്പെഷ്യലായിട്ട് ശ്രീകൃഷ്ണൻ ജനിച്ചപ്പോൾ ഇടിമിന്നലൊക്കെ വന്നില്ലേ, അതുപോലെ നിങ്ങളുടെ. ഓക്കെ, വെരി ഗുഡ്.
Good evening, sir.
Very good evening.
Yes, sir. Good evening.
Good evening, sir.
Very good evening.
നമ്മള് ലൈവ് വന്നിട്ടുണ്ടോ?
Good evening, friends. Yeah, good evening, all.
Good evening, sir.
Good evening. See, last week we have arranged refresher class for ABM, all the modules 2 hours each, and the result of advanced bank management is very much encouraging. Most of the candidates have passed. We are very happy to inform you all that. So you are about to clear CAIIB this time itself. So in order to support you, just like we supported for ABM, from today onwards, this refresher class, as the name indicates, it is refresher class. So continuously it will be taken by the faculties, and any doubt you can ask after the class only. In between, nobody, all are requested not to unmute. So any question is there, you can put in the chat box or come after this, because now this is a refresher. It is a support given to you in your studies. So today it will be international banking 2 hours, and tomorrow and the day after tomorrow, early morning 6:45 to 8 o'clock, we'll be having the treasury management. If anything under IB is there, that also will be covered at that time in the morning hours on tomorrow and after tomorrow. And tomorrow evening we will be having risk management class, and day after tomorrow we will be having balance sheet management. So this way we have arranged 8.5 hours free this revision class. We are very much confident that with this class you may be getting additional 7 to 8 marks, so which make all the difference. And definitely with this class all are going to clear BFM and thereby CAIIB also. Wishing you all the very best. Now it is 7:32. Since it is only 2 hours, I am not taking much more time from our faculty. I cordially invite one and all to the online refresher class of IBS, and I request Ramesh sir to start the class. Thank you all.
So thank you, Mr. Vilayathan sir. I will share the screen.
കവിത മാഡം ഒന്ന് മ്യൂട്ട് ചെയ്യണേ.
Good evening, friends. Hope my screen is visible to you all. Okay.
Yes, sir.
Okay, thank you. So, as we have told, this is a purely recap actually. We are going to do the entire recap shortly. So, just from the examination point of view, I will be going very fast. Wherever you have got down, just note it down. After the class, we will, in one shot, we can finish everything. Okay. So, entire that what we have studied, that entire module we have to finish within 2 hours. Okay. So, right, we go very fast. Whatever that point you have got, you just note it. So, what is Forex? Conversion of one currency to another. Everybody know. Then what is Forex transaction? It is a contract to exchange one currency against another. And regarding exchange rate, It's a rate at which one currency is exchanged against another. Next is, so that the participants, Central Bank of a country is Reserve Bank of India. Then there are two types of transactions are there. That is merchant and trade transaction, and investment and all other things already we have seen. So from the examination point of view, they will be asking questions. There are two types of transaction: merchant transaction, trade transaction. What this transaction is more? Naturally, trade transaction. Already we had discussed nearly 98% of the transaction that comes in the speculative transactions or trade transaction. So this is the basic concept that everybody know. The question will be coming like this: why in Forex the rate is dynamic? Why the rate is dynamic? So that will be the type of the question, because as we have discussed, so 98% of the deals fall from the speculative transaction or trade transaction, running to nearly $5 trillion. So because of that, every 4 seconds the rate change is there. Other transaction, that is customer that we are at the branch level, the purchase and sale transaction that we are giving to the customer is merchant. So that is a point that we have to be care of. And Forex brokers, question that can ask is, the accreditation of Forex brokers is given by whom? They can ask, that is by FEDAI, Foreign Exchange Dealers Association of India. So only the tips I am usually giving. Then another is 24-hour market. We are calling because it is a 24-hour market, because you can buy from any market any point of the time, and you can sell any point of the time. Then OTC, over-the-counter market, and the three types of market are there: OTC market, then stock exchange market, and broker market. Then highly liquid market, everything we know that. Highly liquid because most of the trade transaction already we have discussed. That is a reason for the liquidity. So they can ask a question: why the Forex markets is highly liquid? Because major as already we have this, because they will be testing the question. Once you have the concept clear, then you will be able to answer any question. So the question will be coming like this: what is the benefit of 24-hour market? Because it is possible, it enables you to buy at any point of time, because of the zone differences, time zone differences. In the time zone differences, question they can ask is, usually 1 or 2 questions will be there in the time zone differences. They will not ask question directly, but you should have an idea, that is what are the countries that is falling in the east. That is main market for that is falling in the east is Tokyo market and Sydney market, Australia. So Tokyo market and Sydney market is falling in the east, and that west side market is major market is Frankfurt, London, New York, Frankfurt. So based on this, they can ask a question. So you should have these things in your mind. With this, you will be able to, suppose they are asking a question: can you do a trade with Osaka market at Indian time at evening 5 o'clock? It is not possible. It is on the east side. So you will be able to write from the morning, our 3 o'clock, the bank opens there. Our time 8:30, the market will be closing. That is on the east side. That you should have an idea regarding that. With this, you will be able to answer the questions. This is very important, time zone differences. Then highly liquid, because of liquidity is because of that major transaction falling under a trade category. Then huge capital inflows. That's the interest is the factor that enables the capital flow. That should be in your mind. Then high fluctuation in the exchange rate, because already we have discussed this highly liquid market. Every 4 seconds, the rate is changing because of the fluctuations happening, because major deal is falling on the speculative category. So these are the basic principle concept based on which questions will be asked. So once you have this, so this is the knowledge. It is up to you to transfer this knowledge to wisdom at the question, that when you see the question paper. Okay, right. Next will be fundamental reasons. We know balance of in all these are falling under the fundamental reason, technical reasons, and speculative factors. The questions will be like this: balance of payment. You see, the question will be like this: whenever the balance of payment favors a country, what will happen to the currency of that country? This is the gist of that entire thing. Whenever a balance of payment of a country strengthens or that goes favorable, that currency strengthens or appreciates. This is the point. This is the gist. This is the nucleus. With this, you can answer any types of question, any type of questions. In the examination, they can ask the question will be: suppose the housing data has come, housing data in US has come, and it is showing an unfavorable. What is the impact? You see, what is an impact? It is unfavorable. The balance of payment will be negatively affected. So naturally, that dollar will get depreciated. So you can that applies. This is now this is a time for you to study only the basic things. Basic. So that is a main tip is any country balance of payment is strengthening or goes favorable, that currency of that country will appreciate or will be strengthened. So that's the point. All other things you see, if the political issues are favorable, what will happen to the currency? That will strengthen. If the physical policies implemented or favorable for the country, that currency will appreciate. Anything, suppose the question, suppose the economic growth is coming down, that will have a negative impact. So these are the basic points. With these tips, with this you should be able to write any questions. Okay. Next we will go that cash term, and everybody know, because here that what is a cash is settlement today, tomorrow is next day, spot is second working day, forward is anything beyond spot. Already we have discussed. Here that one theory point what you have to be aware of is why by default all the transactions on spot basis. Already we have discussed all the transactions are done on spot basis because of the time zone differences. Because of the time zone differences, by default, if you are asking a rate, naturally by default it will be the spot rate. Spot minus 1 day interest will be the term. Spot minus 2 days interest will be the cash rate. So that is and forward rate, depending upon the forward period and the interest rate differential that we will discuss later. So these are the three tips that you have to bear in mind. Is only this. Spot is by default, that is the rate what we give. That minus 1 day's interest will be a term. That minus 2 days interest will be. And here one additional point you have to bear in mind is always if the premium, depending upon the premium and discuss, you just study what is to be done on premium. And if it is discount, I will show you a slide. Just the opposite of premium. Just what you do for premium, just the opposite you have to do for discount. But
so forward or future is same thing or different?
Hello? That we will just note it down, madam. After this, after the class, we will discuss definitely. Then the two types of rate, because here it's a two-way code. This is the property available only for Forex transaction. You ask a rate, both it will be buying and selling. And buying has got three different lines. Buying rate is the same, bid rate is same, purchase rate is same, and selling rate is the offer rate or ask rate. How you do the buying and selling is very important. Whenever you are doing the problem, it is very, very important, because the buying and selling is discussed or differentiated or distinguished from the bank's point of view, And what happens to the foreign currency? If the foreign currency is inflow for the bank, it is buying or purchasing. If the just opposite, if the foreign currency is outflow for the bank, we call it as a sale. This is very, very important, because based on this only you will be taking the rate. Next is direct quotation and indirect quotation. Questions that they can ask is, we are following indirect quotation. They can ask is, from which year India has resorted for indirect quotation? Is 1993 is their answer. And what is the property of indirect quotation and direct quotation? First we will see direct quotation. In a direct quotation, India has adopted direct quotation from 1993. Sorry, not indirect, direct quotation. In the direct quotation, one unit foreign currency is quoted. US dollar, $1 is equal to INR. So in the examination, they can ask you, in which quotation the home currency will be fluctuating and foreign currency will be fixed. That is, answer is direct quote. And another question they can ask is, India, from which year onwards India resorted to direct quotation? 1993. And here the maxim is buy low, sell high. We can see the buying rate will be low and selling rate will be high. And coming to the indirect quotation, it is derived from this rate. So now naturally the probable question they can ask is, these four currencies. That is GBP, Euro, Australian dollar, New Zealand dollar, all are the four currencies where the indirect quote is being followed. They are maxing buy high and sell low. The rate will be reverse of that quote. And that examination they can ask is in which quote that foreign currency remains fluctuating, it will be an indirect quote. And once again, it's the most important is these four currency: GBP, Euro, Australian dollars, New Zealand dollars. These are the four currencies that follow indirect quotation. All other currencies are following direct quotation. Bear in mind, 1993, India switched over to this system. Next is calculation of premium and discount. Because I've been of late, last 10 days, I've been receiving so many calls, and all the students who were having doubt on this premium and discount, I will show a slide how to do it problem. You know the premium and discount, you know the forward differential. So if it is premium spot plus premium, premium is nothing but the interest rate differential between these two currencies. If it is negative, we call it as discount. So to arrive at the forward rate, you have to add premium to the spot rate. If it is premium, spot plus premium will be the forward rate. If it is at a discount, spot minus discount. Now the question is how you differentiate from the question it is a premium or a discount, that you have to these the descending order or ascending order is the easiest thing. Now we did not go for the interest differential of that currency and all. Easiest thing is distinguish from this. If it is ascending, it is 5 paisa and 10 paisa ascending order. So it is a premium. Here you see it is 10 paisa, 5 paisa reverse, it is a discount. In premium, you add, discount, you deduct. Next is, I have shown because so many students were asking so many doubts. Here you see I have just for comparative study, I have shown a premium and discount. This slide will be shared to you, don't worry. You see this, suppose I have to give a rate for a transaction which is following a full month of second month. So in premium, first we will look at the premium. In premium buying transaction, this is buying, this is selling. In buying, this is the premium. In selling, this is the premium. So in buying, we take the previous month. So you see, if the spot is 75.50 plus 6, the rate quoted to the customer will be 75.56. In the case of a sale transaction, for the month, to that extent, the rate is going unfavorable for the customer. So the rate will be 75.66. Because in buying transaction, you pay less. In a selling transaction, you get more INR from the customer. That is why we call it unfavorable. But you see just the reverse in the case of a discount. Here we were taking the previous month. Here for the month in a sale transaction, previous month. Accordingly, it is spot 70.50 minus this 34 in a selling transaction. That's earlier month 75.50 minus 6 paisa 75.40. So you just for now the examination is just within 2-3 days. You do not bother to take pain for understanding more of it. First study what is premium. You got the treatment of discount will be just the opposite that you do for the premium. That is enough. Only that you should be very much vigilant and prudent to distinguish how what is premium and discount. That is only way is ascending order or descending order. That is enough. Next, then fixed rate and floating rate mechanism. Here probable question will be, also already we have discussed, India now has switched over to floating rate mechanism. And fixed rate mechanism already, because already we call it as this authority will be pegging that currency. The probable question will be like this. Probable question will be India switched over to indirect quote from which year? Already we have discussed 1993. Then another question will be, in a fixed exchange rate, the official rate is set by the relevant authorities. In which case the following the floating exchange rate it is decided by who? That is, in a fixed exchange rate, the official rate is set by the relevant authorities, their regulator. Then in a floating rate exchange rate system, it is decided by who? The answer is demand and supply of that currency. So you just understand this point based on this, they will be asking the question. So definitely all the question you will be knowing the answer, but depending upon the nature of the question, you have to decide how you have to present the answer, because naturally one to the options will be given. So you take time to ascertain. So this is the question, this is the way they have asked. So the question you have to ascertain, and also you ascertain that after deciding that point number 2 or 3, answer A or B is the relevant answer, you just tentatively select that and ensure that others are not the answer. After that only you should go for the answer. Okay. Next is there's the problems. I have just consolidated all the tips that will help you for doing the problems. Exchange arithmetic. Number 1 is exchange. You have to round to the. You have to calculate up to the 4th decimal place, and okay. Then the last 2 digits, 3rd and 4th, we call it as pips. That should be rounded off to the nearest quarter of a paisa. Then commission to be added in the respect of a sale transaction and deducted from the purchase. And treatment of premium, already we have seen the slide. That is, in premium you add that, and discount you have to deduct. Only that you should be diligent, you should be prudent, you should be wise in selecting which month it is pertaining to. You have to take the, in respect of discount, you have to take opposite of how you take of a premium. In common currency, in common currency is the opposite side, two-sided diagonal. That is, if the currency pair we are dealing is on the both or direct quote, then the common currency will be on the same side. Then you have to multiply by the rate. I will show that we have got a slide. If the common currency is on the same side, divide by the rate. Then beware of the answer in respect of N. You should be very careful, because FEDAI had taken decision. As per the FEDAI guidelines, we have to quote 3 currencies are Japanese yen, Indonesian rupiah, Kenyan shillings are quoted against 100. So even if they are given an answer, that is, suppose the answer is 58 pounds something for 100 yen. Suppose you have arrived at the answer, it is 0.5. Definitely option A will be 0.8, but you have to quote in respect of 100 yen. So just to see what is, if it is by default, you have to quote rate for 100 yen. So naturally they will be also, they would have given that answer for both 1 yen and 100 yen. So you should be very careful. Then always adjust that premium or discount first, then only you should go for adjusting the commission, because a lot of persons have got a doubt, because in the book and all they have shown differently. Never look at the book. You have a policy, you first take the spot, then adjust premium or discount. Premium, that whatever is the premium, add. If it is a discount, less. To that you adjust the commission. That's a standard policy. That is how the bank also will be quoting the rate, because the rate for a customer is inclusive of premium or discount. That's the rate. To that rate only we have to adjust the commission. That's the rationale. And another example is, suppose they are asking a specific date. In the book, the test is there. In the text, they have given this specific question. If the date of transaction, the date of delivery is specifically 15th of August, then you have to add the premium up to that period. 50 pro rata, that also you have to. 15th, except 15 days premium also they would have given, that also you have to do. Then in if we say forward percent transaction, if it is a cancellation, if the rate is less than the original date, if the cancellation rate is less than the original rate, naturally it will be a profit for the customer. This one you study by heart. Then it will be, if it is a FSC, just the opposite. That is enough. Again, I will tell, if it is in the case of a forward purchase contract, if the cancellation rate is less than the original rate, say an example, original rate is 70 rupees. Now you are cancelling at 65. That means it will be forfeit for the customer. You have to pass on the customer. Just the opposite. If the rate is more, it will be loss for the customer. If it is SFE, that is FSC means forward sale contract, take just the opposite of FSC. So this is a common currency, what I have referred. In this, these are 2 currency pair where the common currency dollar is opposite, because this is a direct quote, this is an indirect quote. That is why the dollar is coming opposite. In this type, you have to multiply by the opposite type. Buying into buying will be your buying answer, selling into selling will be your selling answer. And in the suppose the currency pair is both are direct quote, in that case the common currency dollar will be on the side where you have to divide by the rate. Divide this by the opposite rate, divide 74 this by the opposite rate. That will give you the effect cross rate of the currency. Next is forward rate. Already we have seen forward rate is calculated based on the interest differential of two currencies. We call it as forward points. Next, some examples of TT buying, TT selling, bill buying, bill selling. So here one point what you have to understand is, suppose TT buying is the best rate for the customer, because to that we are adding minimum most commission. Why the bank is adding minimum most commission? Because already this is a covered transaction. Funds have been received by the bank either in the nostro or it is given by the customer. Already the funds are received by the bank. There is no risk involved. So for that, so minimum commission is added or the TT buying transaction. Bill buying in a bill transaction will be there. The risk is more, work is more, commission is slightly added. In respect of selling transaction, just the opposite, bill selling. Bill selling is the worst rate for the customer because here our liability risk is more. So our commission is more. So anything related with import, is it, let it be crystallization, let it be retirement, you have to just study by heart. This is bill selling. Anything connected with retirement of import bill, anything with import bill, whether it is retirement or crystallization, just to take bill selling. That's enough. Next is arbitrage. 3 points. Is it a simultaneous buying and selling? Number one. Number two, two different market. Number three, always it will be a profit. Always it will be a profit. So that is that point that makes it different from the swap. Swap is, though it is not simultaneous, it is for two different buying and selling takes place in two different legs, two different time. Here it is simultaneous. Always an arbitrage will be in profit only because it is simultaneously done. The purpose of arbitrage is to make profit. If you are taking benefit of taking advantage of the interest, we call it as interest arbitrage. Then foreign dealing room. You should be, we'll just go through that what are the functions of the main dealing room, because in the action AB, one of the following does not pertain into dealing room. They can ask. Suppose they say asking confirmation of deal or deal settlement, that comes in the back office. So just read that, then it will be in your mind. Then they will be asking the question like this: one of the following pertains to, does not pertain into dealing room. Then okay. Then funds position, and these are the two positions maintained by the dealing room. Fund is a replica of our nostro fund. Whatever inflow that happens there, you have to add. Whatever outflow that happens in the nostro account, you have to deduct. So that you will have a mirror type account of what is the position, what is the fund actually available in the nostro. You can have an account here. That's the purpose of funds position. This is very, very important. Currency position, because this is wherever, bear in mind, most important point that you have to bear in mind in currency position is any currency will come to currency position or exchange position. Two names are there. Currency position and exchange position is one and the same. Only on conversion. Bear in mind, only on conversion, any currency can be taken into currency position or exchange position. Suppose you received $1 million in nostro, but you are not making any conversion, it will not come in either in currency position or exchange position. Only whenever conversion happens. What is conversion? Either rupee to foreign currency or foreign currency rupee. That is the conversion. For the purpose of conversion, you are utilizing exchange rate. Only when you are applying the exchange rate and making the conversion, then only it will come to currency position. Then if it is purchase is more, we call it long. That is overbought or long. If it is other way, that is sale is more, we call it short or short position or oversold position. Here, the purpose is we call position because once it is in a position, either let it be overbought or oversold, it is exposed to which risk? One question they can ask: exchange rate fluctuation risk, exchange risk. To square that, we will be doing an opposite degree, that is known as cover operation, so that we bring to the squared position, so you will not have any exchange risk. So one question they can ask is, when a dealer is running a position, what is the risk? that position is exposed to. It is exchange rate risk, exchange position or exchange rate risk position, exchange rate fluctuation risk, price risk, everything is the same. Ultimately, all of these come under the market risk category. Market risk. Next is front office. The comparison just to go through that, bear in mind, because in the examination they can ask one of the following does not pertain to. Most is maintaining nostro and all comes in the front office, and back office, the processing audit, verification, reconciliation is the most important. Here last time they have asked that where they are reporting they have asked. So bear in mind, front office and back office, they independently reported to the treasury head. They also straight away report to the treasury head, and back office also report directly to that. This was the question they have asked for the examination. CRO, Chief Risk Officer. The mid office, they will be reporting the transaction to Chief Risk Officer. Risk management is the main, ensure that all the compliance guidelines are being complied with on perpetual basis is to be managed, seen by the mid office. This was 2-3 times they have asked this. Chief Risk Officer, bear in mind. Next is categorization. AP now at the, though we call by name authorized dealers, as per FEMA, we are all authorized person. So examination purpose, AP 3 categories are, one example is bank. All type of transaction we can do. AP2 is full-fledged money changes. They can do only purchase and sale, but they cannot do speculative transaction. AP category 3 is RMC, restricted money. They can be a franchisee of this. They can do only purchase transaction. Only here that AP category 3 transaction, they can only buy. They can buy and they have to deposit this money to the AP category 2 for their linked branch within a period of 7 days. 7 days. Within 7 days, the franchise, this is a franchisee, this is a franchisee, this is a franchisor. To the franchisor branch, they have to deposit the money, foreign currency, within 7 days. Within 7 days. Okay. Then major guidelines, that is normal transit period. 3 types of bill, NTP, NDD, FDT. NTP, the 25 days, NDD 25 plus the USAN period, FDT, there's no transit, only the period of USANs. So this will be that when you are calculating interest or anything, this is, you have to bear in mind this. Then crystallization. Do you know what is crystallization? PD is at the TT selling rate in respect of purchase transaction. They can ask objective question, they can ask crystallization of export bill, TT selling rate. Crystallization of import bill, anything connected with import bill, I have already told it is a bill selling rate. Then another point is crystallize. That is, as per the now both the bills, whether it be export or import bill, it has to be crystallized only as per the stated policy of the bank. Stated policy of the bank. Then another important question you have to bear in mind is all unpicked non-delivered contracts should be cancelled on the 3rd working day. Objective, they can ask 3rd working day, it should be automatically cancelled. And regarding the profit, anything done prior to, before the due date, profit or loss should be passed on. Anything done after the due date, profit will not be passed on, only loss will be passed on to the customer. That also bear in mind. Then cancellation of forward contract at the opposite TT rate. Opposite TT rate. Then this also bear in mind, because objective they can ask, that is Indonesian rupiah, Japanese and Kenyan shillings, because the value is very small. As per the FEDAI guideline, it should be quoted against 100 units of that currency. 100 units of that currency. Next is, then guidelines is, this point is, now what is the limit for overseas borrowings by the bank? Limit of overseas borrowings by bank. That is 100% of the tier 1 capital or 10 million, whichever is higher. Whichever is higher. The question that probably they can ask is, they can give you 2-3 items that fall under the tier 1 capital. They can give you 1 or 2 items that fall under the tier 1 capital. And you have to, what is the eligibility of borrowing? What is maximum overseas borrowing can be, maximum overseas borrowing can be availed to up to what limit? So you have to add all those items that come under tier 1. Suppose that is coming only to 9.5 million, then your answer should be 10 million. Suppose all the items that which is a part of the tier 1 comes to 12 million, then your answer should be 12. Whichever is higher, they can ask. Then another limit is limits are permitted to booking forward. Individual can do up to $1 million US. And here, one additional point that you have to bear in mind is everything is quoted only in respect of US dollars. If it is any other currency, it is equivalent of that US dollars, equivalent of that. Then another thing is important that clients past performance quota also is available. That is based on the average of 3 financial years. So this is all about that exchange arithmetic. Then quickly we can go through some 4 or 5 questions already. One question? What is the need for Forex transaction? What is the need for it? To enable global trade, capital flows, travel and tourism. This point should be in your mind so that when you see that objective, it will come to your mind. Then selling and all what you have seen. Then with which market you can trade after 5 o'clock in the evening? Answer is Frankfurt market. And suppose the question is in which market will be open by 8 p.m. That is our night 8 o'clock. It will be US market. By 7 o'clock that opens. 7 p.m. it opens. Then another question probably is already we have discussed. If the balance of payment is favorable in a country, that currency will dash. That will appreciate. Next question is, high domestic interest rate attract overseas capital. Is it true or false? High domestic interest rate. If the domestic interest rate increases, it will attract overseas capital. Capital flight will happen. So the answer is true. Then political stability will lead to economic stability. That will lead to steady currency. This is a statement. So again, once more, I am reading the statement. The political stability will lead to economic stability, which in turn will lead to steady currency. Whether this statement is true or false? Yes, this statement is correct. Because naturally, political stability will be leading to economic stability. Then that will ultimately lead to the steady currency. All are favorable factors. Ultimately, the currency will appreciate. That currency will become stronger. Next question, probable question is, capital normally move from a lower yielding currency to higher yielding currency. The capital will normally move from a lower to higher. That also is true. Another probable question is, INR is a soft currency or a hard currency? It is a soft currency. Because of its nature as a soft currency only, we go for the cross rate mechanism. Otherwise, we will not go. Another question is, in a perfect market, interest factor is the basic factor in arriving at the forward rate. In a perfect, what is a perfect market? Both the currency pair will be fully convertible, Imperfect match is one of the currency will be, that is example is INR, that also will be in a currency pair. Suppose dollar and GBP, both the currency are fully convertible. So that is, we call it as a perfect match. There that forward rate will be 100% only the interest rate differential. Next is a currency is taken into position only when it is converted. Only on conversion only it comes to position. That also is true. So these are the sample questions in this that comes under the first part. Next we will go to that second module. Can you see the screen sharing? Hello?
Yes, sir.
Yes, sir.
Oh, thank you.
No.
Not sure.
Correspondent banking, you are not able to see.
The file is not open, sir.
Okay, I will just take one second. Can you see the screen sharing?
Screen sharing.
Now, hope you can see now.
Yes, sir.
Okay, thank you. So what is a corresponding banking? It's a relation with another bank for banking needs. Because objective they can ask. Easy, because the corresponding banking and all, you'll be able to infer easily from that question type. You need not spend more time for it. Next, please. Next is Nostro, Vostro, Loro, Mirror. Definitely one or two questions will be from this. Nostro is our account with you. It will be in foreign currency. We maintain with a foreign bank. Another question probably they can ask is the date of credit to Nostro is known as value date. That 2-3 times they have asked that. Another that also you should bear in mind. Next is Vostro, your account with us. The account maintained by that foreign bank with our bank. When they maintain with us, naturally it will be in the home currency. Loro account is their account with third party. Suppose I want to give a payment to a South African bank. Suppose the currency is dollars. Instead of my sending this amount to South Africa and they sending to their Nostro account with America, directly I can send. So that is Loro account. As per instruction, I will be crediting to their account. That is third party. Mirror account is a replica of Nostro account. Here is the 2-3 questions definitely they can ask. The mirror account is maintained both in foreign currency in INR, and it is a replica. So whatever debit in the Nostro account will be here will be debit, credit here. Whatever credit is there, it will be debit. So the implication of mirror account is, suppose the mirror account goes what is in credit balance, that means our Nostro is overdone. So this is a simple question they can ask. SWIFT also, everybody know the full form, and the Society for Worldwide Interbank Telecommunication, Financial Telecommunication. The question will be why that's authenticated. Any message that you receive through the SWIFT is authenticated, self-authenticated. Because of that, now earlier the bilateral key exchange was exchanged. Now the new name for BK is Relationship Management Application. Suppose two banks cannot send unless they exchange this RMA. So because of this, any third bank will not be able to intervene in that. So that because of this factor, it is self-authenticated because it is very much secure. And this is what is the benefit also in the objective they can ask. It is fast, it is error-free, self-authenticated, and globally accepted. It is globally accepted. And here that only the easy, that Fedware, chips and chaps, how we have to study is Fedware, it is in US, it is just our RTGS, gross. Chips is for net settlement, just like our NEFT. Here it is chaps, it is a British system, just like our NEFT for net, and target is European gross settlement. So this point only you have to bear in mind. That's again, Fedware will be US gross, chips will be net basis. Chaps in Britain will be for net settlement, and target in European for gross settlement. Just like our RTGS, that is enough. RTGS and NEFT you will be knowing very well. Only that you have to bear in mind this 2 lakhs is a minimum amount, bear in mind. And now that both are that NEFT, now it is running in full 48-hour half yearly batch. It is down 24 hours. That is why 48 half yearly batches. And both the pooling account is with Reserve Bank of India. Here RTGS, Reserve Bank of India. Here the pooling account is made by the individual bank. That's enough. The minimum amount just bear in mind. They can ask. And regarding NRA accounts, they can definitely some questions will be there. Just that NRA accounts have 2 definitions. That is one by IT Act. This is the IT Act definition, and this is as per the FEMA. And for banks, we are concerned about the definition as per the FEMA. So here the probable question is OCI, that is overseas question that who migrated from India, they do not have voting right. Now another thing is, earlier this PIO was forming a part of NRA definition. Now this is segregated. This is based on separate definition is brought for PIO. But all other purposes we treat, because whatever the benefit for NRA, the PIO extended. Only in some portfolio investment and all, some difference is there. For our banking account opening, everything by default, these 2 are the same. Whatever benefit that is available for NRA is available for PIO. But only now is segregated from, it is outside that definition. Next, NRA account, the benefit repatriability main thing. Person can have his wife, suppose she is a resident. So the joint account is permitted. Only the clause is FRS that you should be very cautious about. Then repatriability is the benefit. Then the period also 1 to 10 years. 1 to 10 years. That is enough. Then another thing is, suppose a person returned back to India and he says he wants to maintain in foreign currency. It is possible a resident foreign currency account. They can ask question on that. Next is, here also that NRI account also say that is a redesignated. That is, as soon as the person comes back to India, immediately it should be redesignated as account. This is a change. As soon as a person comes back to India, immediately it should be designated as NRI account. And here also the facility of FRS is possible. And here also the repatriation up to $1 million US per financial year is permitted. That is, any person in that is a non-resident Indian can, a non-resident from his NRI account, he can transfer up to 1 million or equivalent of that currency per financial year. That means from NRI account also, after paying all the taxes, he can repatriate up to 1 million US dollars per year. Then another question is foreign student. What account you will be opening NRI account? Then suppose a foreign travel is approaching your bank for opening an account, up to 6 months NRI account is permitted. And suppose an embassy person is approaching you. So he's a foreigner, he is working in the US consulate. For him, based on the credential, you can open only a normal account. You can only open a normal account. Next is, just like FCNR here also, the point you have to remember is FCNR can be opened only as term deposit. Period is 1 to 5 years. The interest is linked to the benchmark rate of labor. And on change of transaction, all other deposit, as soon as the person comes, you have to immediately convert to resident deposit. But this is the only deposit that's permitted to continue till the period is completed. This is the FCNR is the only deposit where you can allow the deposit to run for the remaining period. This is the only deposit. Then SR, there is special non-resident rupee account. Here the change is, here the stipulation 7 years, earlier it was stipulation of 7 years, it was there, now it is not there. Another is ECB credit, external commercial borrowing, that is done under rupee, because both under foreign currency and rupee you can avail ECB. Whatever that you have availing in INR, that is permitted to be credited under SNR, this account. These are two changes that has come recently. The facility NRI, that you should not give loan for agricultural plantation purposes. As you know, the proceeds cannot be repatriated abroad. Always the loan should be credited to an NRI account. Then earlier the loan against FD fixed deposit 90% limit was there. Now it is not there. Whatever is eligibility, we can give. Then we come to derivatives. Derivatives is a financial instrument. And what are the examples is forward contract, options, swaps, and futures are the common thing, because more we'll be seeing in the treasury tomorrow or day after tomorrow. So what is a risk? That is something that we have unforeseen thing has happened. That's a risk. Different types of risk: exchange risk, settlement, liquidity, country risk, interest rate, and operational legal risk. Here the exchange risk is because merely by telling risk we should not stop. And our bank is concerned about what are the mitigation, that are the thing that you have taken, hedging, counter thing that you have taken for checking the risk, that how you are going to manage the risk, that is more important. Hedging the risk is more important. So the hedging tools are the derivatives. Next is, these two things are very important, because transaction approvals and translation approvals, these three exposures, they will be definitely asking in the examination. The transaction exposure is the risk arising due to normal business operation. It's a part of the business, that is transaction exposure. Suppose you are holding rupee at a fixed 75, the rate is going unfavorable. Naturally, you stand to lose. This is an exchange risk. This is an exchange rate fluctuation risk, or market risk, or price risk. This translation exposure is risk due to revaluation of foreign currency and liability in home currency. Suppose when you are doing the revaluation rate goes unfavorable, the loss on account is known as the translation. Another thing is operational or economic exposure is external factors. Example is suppose that government policies, loss that process comes because of the government policies. So these three terminology you should be very clear about this. Then pre-settlement risk and settlement risk, because we should not get confused with this, because this pre-settlement risk happens before that set value date, before the settlement date. Pre-settlement risk is that happens before the settlement. That's why we call it as pre-settlement. That is only a price risk. Question can be why that is limited to price risk? Because exchange of flows does not take place only because of the suppose that bank failure, or we have to go for the substitution of it. Because the pre-settlement, one of the settlement bank does not, that is something happens to the bank, that settlement will not take place on that due date. So you have to go for the substitution of a deal. When you go for the substitution of the deal, the price may be different. Price may be different. So if the price is unfavorable, we call it as a price risk. But in settlement risk, that happens because of the time zone differences, because already you are outflow, one leg of the transaction already is over. So you have already parted with your fund. Because of that, it is a credit risk. It is a credit risk. Next is various types. There's a country risk, because of the foreign entity unable to meet the obligation. Then sovereign is, that is government itself or the agency is not able to make payment. Liquidity is a mismatch in the asset and liability. This they can ask it. Mismatch in asset and liability or inflow outflow will amount to liquidity risk. The interest rate or gap risk, adverse movement in the interest rate will result in this operation risk because system failure, human error. And question in the examination they can ask like this, one of the following does not relate to operational risk, they can ask. So you should be familiar what are the major item, the common item that comes under this. Then external event, T-sinometer, reciprocal, all these come under the external events. Then legal is non-enforceability of contract. Here one point that you have to bear in mind is, in respect of these risks, legal risk and political risk, the party is willing to make only reasons beyond his control, he is not able to make the payment. So this is ICG. These are the various hedging things that we are doing to counter, hedge or mitigate the earlier referred as overnight to daylight. Naturally here overnight the limit will be small and the daylight will be 5 times this. So these are the various limits. Then here Clearing Corporation of India is a settlement agency because the delivery versus payment, settlement is totally mitigated. Mitigation of settlement. So in the examination they can ask like this: because of DVP, delivery versus payment, which risk is mitigated? Is settlement risk. Then when they are making the payment on default of one of the bank, they will be making the payment naturally. Then the payment is made from the settlement guarantee fund. That also 1 or 2 times they had asked for the examination. This affects clear is the foreign gaming system launched by CCA, the rupee INR. Okay, this is enough because it's very simple. Next we will go to the next category. Next, very important, we'll go to the letter of credit. Hope can you see the slide, please?
Yes, sir.
Okay, okay. So letter of credit, it's a very important, very important. Definitely some questions will be there. Everybody know what is a letter of credit. Then the parties to the letter of credit: applicant, opening bank, beneficiary, advising bank, conferring bank, negotiated bank, and reimbursing bank. And this slide you just takes 2-3 minutes and just copy in your mind. This should be totally absorbed in your mind. This is a flow. Actually, it is opened by the, as you know, it is opened by the applicant or the opener with his bank. This is number 2. It goes to the bank open. That's why it is known as opening bank, LC issuing bank, and that will be advising via SIP to the exporters bank in the exporters country, and they will be advising to the customer. And then on the due date, he will be giving all the documents to the exporting bank. They negotiate. If it is an order, they make the payment. And they will send the documents to the opening bank. If the documents are RC complying, they debit the customer's account and make the payment. This is a win-win transaction for all the customers. Otherwise, that transaction cannot take place because we will not know details about that part. Another thing is the different types of LC: revocable, confirmed, transferable LC, red class, B class, back to back, standby LC. This nature, I think you will be all aware of it. Definitely one or questions there. We can discuss some questions on it. No problem. Then basic articles. Article 4 is total 39 articles are there. Then Article 4 is it deals with credit and contract. Article 5 is bank deals only with document, not with goods. We are dealing on that way. This is called documentary letter of credit. And Article 4, all are important. And from the case study point of view, these articles are more important. Article 14 is bank shall have minimum 5 banking days. Earlier it was 7 working days. Now it is 5 banking days following the date of presentation. Following the date. Suppose in the case study, suppose the customer has given the documents on Monday. Monday means you exclude that Monday. You have to start counting from Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, holiday, and Monday. Next Monday evening 5 o'clock, that's the last date for negotiation. Again, I will tell, because suppose you want to compute to the date, it is following the date of presentation. Suppose the customer is giving the documents on Tuesday. We exclude that Tuesday. Following the date of presentation, 5 days.
I had a customer.
Somebody has to please switch off the mic, please. Next is 16. That is discrepancy of documents. Here it says that whenever some discrepancy is there, I think somebody has to please. Hello.
Raja sir, please mute.
Article 16, is that it is in respect of discrepant document. That is, in one shot, you have to give a swift message what you are going to do with the discrepant document. Whether you are refusing to honor, or for the discrepancy you have to list, and whether you are referring to the opener for waiver. What is that you are going to do, you are planned to do, that should be advised to the negotiating bank in a single stroke. Then Article 28 is regarding insurance. Most important is it should be in the same credit currency of the credit. Unless insurance, the LC stipulates. Suppose the LC is permitting that you can have in a different currency, then it is permitted. All these article applies only if the LC is silent. If the LC is silent, whatever that is stated in the article, that applies. So 3 points you have to bear in mind in insurance is: number 1 is both should be in the same currency, and it should be for 110% of the CAIIB value. And third thing is it should be effective from the date of shipment, or the insurance should be effective from the date of shipment. The 3 things are very, very important. Article 30 that explains about the tolerant limit. It is the quantity amount plus or minus 10% can be there, in quantity plus or minus 5% can be there. And Article 36, force majeure, that is bank assumes no responsibility on account of consequence of act of God. This is about that. Next is Incoterms, international commercial terms. Total 7 plus 4, 11 are there. This maritime is number 4. Of this one, this 2, 3, 4 is very important. FOB, free on board. Most of the, because as a bank, we will be releasing finance only on FOB basis. Suppose we have already done one question, we have done problem on that. So suppose they are giving a CIF value or CFA value, we have to deduct that cost, freight or insurance, and find or arrive at the FOB value, and deducting whatever is the margin as per the credit sanction. Then only we have to make the release the packing credit. So because FOB is very, very important. Next is here the one change that has come is here that X works and this is date, that is delivery at terminal, now is being renamed as DPU because delivery at place unloaded. Earlier it was terminal. Now the change is instead of terminal, it can that without unloading, you can reach the goods in a place. So that is a change that has made. Only that that has been renamed as DPU. That delivery at place unloaded. So only one change you should be aware of it. Then crystallization. Crystallization is the conversion of Forex liability to rupee liability. Conversion of the Forex liability, foreign currency liability to INR liability, home currency liability is known as crystallization. And as per the FEDAI policy, now each bank can decide their own stated policy when they have to do. Then the rate also already we have import bill, bill selling rate, and already we have seen export bill, TT selling rate. Then evidence of report is bill of entry. Whenever, because when you make some payment for import of goods, we should be the thorough one. We have to track that whether the goods in respect of the payment has reached. So that is a proof is bill of entry. Customs authorities, they will be giving now everything is to EDPMS. So that is, now we will go for some 2-3 questions on some questions on LC. What is the current version of UCPDC? The answer is UCPDC 600. Next question they can ask is, by default an LC is irrevocable. Answer is by default it is irrevocable. Earlier it was 500 was. Now I am only asking the questions was just on LC. Next time. Next, by default an LC is documentary credit is irrevocable. Next question is, always an exporter opens the LC. Is it true or false? It is false. Always, no, it is always the LC is opened by the importer. Next question is, the buyer is the applicant of the LC. Always the buyer will be the applicant of an LC. That also is correct. Always the buyer will be the applicant of the LC. He is the opener of the LC. Then UCPDC is issued by whom? It is internal. Answer is ICC Paris, International Chamber Paris. Next question, probable question is, an LC, letter of credit that can be transferred is called. An LC which can be transferred is called transferable LC. Transferable LC. Another question is, an LC that is opened on the strength of the prime LC. That is known as back-to-back LC. That is known as back-to-back LC. Then another question is, how many articles are there in the UCPDC? That is, answer is 39 articles. Next is, the period relating to the examination of documents is mentioned in which article? The period, that is 5 working days. We were telling 5 banking days. Earlier it was 7 working days. Now it is 5 banking days. Article 14. Article 14 is very important. Next question is, can a shipper or a consignor be a beneficiary of an LC? Question I am repeating. Can a shipper or a consignor be a beneficiary of an LC? No, answer is no, because only an exporter can be the beneficiary of an LC. Only the exporter can be the beneficiary of an LC. Next question is, what is the risk shouldered by the confirming bank? Suppose a bank has opted to confirm an LC. What is the risk it is shouldering? It is a credit risk. Because when it is adding the confirmation, our customer or the exporter is totally without recourse. He is absolved from his liability. In case something happens, you have to shoulder the risk. That is credit risk. Next is, the applicant is ultimately responsible for the losses, if any, due to the foreign loss. Suppose some losses happen because of the that is due to the on account of foreign loss. In case the applicant is ultimately responsible. Yes, true. Any losses that happens because of the foreign loss or anything connected with that, ultimately the applicant has to absorb that. He has to shoulder that. Next question is, it is whose responsibility to examine documents before making the payment? Before making the payment of an LC bill, export bill under LC, whose responsibility is to ensure that it is totally error-free, or that examination, responsibility to examination rests with the negotiating bank. Next is, in an LC requiring bill of exchange, who should draw the bill? In a letter of credit which requires a bill of exchange, bill of recurrence, and who is the party who has to draw the bill? It is a beneficiary of the LC. Always the beneficiary of the LC exporter. He will be the person who will be drawing the bill of exchange. Next, the insurance is for which value? Always the insurance is FOB value. By default, it is 110%. 110% of the FOB value should be the insurance. Then, what is the name? We call it the process of converting foreign currency liability to INR liability. Already we have discussed. It is crystallization. Next question is, standby LCs are a substitute for? Standby LCs are a substitute for guarantees. In foreign America and all, there is no concept of guarantee. Instead of guarantee, they will issue only standby LC. Next is, what is the importance of URR 725? URR 725. It is a ICC guideline for bank-to-bank reimbursement. It's a URR 725 is the ICC guideline, International Chamber of Commerce guideline for bank-to-bank reimbursement. Next is, any reimbursement authority must have an expiry date. Is it true or false? Question is again, I am reading. Any reimbursement authority must have an expiry date. True or false? It is false. The reimbursement authority does not or should not have any expiry date. Should not have any expiry date. Next, who pays the reimbursement bank's charges? It should be paid by the issuing bank. Reimbursement charges are paid by the issuing bank. Next is, in which article deals with losses consequent on account of terrorism? Now that is included in Article 36, class force majeure, flood, and like that, hartal, any consequence along with the reasons, along with the flood and all. Now the terrorism also is added. Next is, exports are accounted on CAF basis. No, wrong. It is accounted in FOB value. All the exports are accounted in FOB value. Government of India is accounting exports in FOB, that is free over board only. Next is, what is the change made in the Incoterm that DPU already? That is delivery at place unloaded, because it's a recent change they have made. Probably they can ask just to confirm that whether you are keeping in touch with the recent developments. Then two more questions. What is the evidence of import? What is the evidence of import? Is bill of entry. Last question is, should a commercial invoice be signed? Should a commercial invoice be signed if the LC is requiring? If the LC is requiring that the commercial invoice should be signed, because in Article 14 they said it need not be signed. But if the LC is specifically telling it should be signed, then it should be definitely signed. Then it should be definitely signed. So these are the basic, just common guidelines. What will be the nature of the question that will be asked. Next, we will go for the facilities for importers and exporters. Facilities for importers and exporters. Can you see the slide? Facilities for exporters.
No, sir.
No, sir.
Right.
No, sir.
I am.
Yes, now we are able to see.
Right. Because every time I have to exit and again enter. I have understood that. So in Forex parlance, a seller is known as exporter, a buyer is known as an importer. So who is an exporter? A person who is selling from this country goods is known as an exporter. Then you see, regarding the control of goods, how the goods are being controlled, because once you understand this chain, how this happens, it will be easy for you to understand the some types of questions, that is some objective questions. If you know how this is happening, this you will be able to answer some questions. That is, Government of India is controlling Ministry of Commerce. That is, Ministry of Commerce comes under Government of India, and Director General of Foreign Trade comes under this ministry. They can ask one-word questions, objective questions. Then foreign trade policy is framed by DGFT. Here, one point just bear in mind. Usually, this will be for 5 years. Actually, once the 5-year was due by March 20. That is March 2020, it was over. Because of the COVID situation, they have not framed the policy, which will be for another 5 years. Normally, but for this COVID pandemic, it would have been from 2020 to 2025. Now, because of the pandemic, it has not happened. And the same policy which was there up to that March 20 is extended up to March 21. Just for your academic interest, I am saying. And FTP, then customs, they come under this, and the shipping bill are being issued by the customs, through which only we come to know that what is the value to be repatriated. And the authorized persons, authorized dealer, we banks, we come to know of the details of the export through these shipping bills, and the exporter is coming to the bank parties. So if you the record, every exporter will be coming to the authorized dealer, authorized person, along with the shipping bill issued by the customs, and this will be in line with the foreign trade policy or the Exim policy, which is framed by the Director General Foreign Trade, which is coming under the Ministry of Commerce, which is coming under the Government of India. This is the flow, how that happens. Again, I will tell, exporter will be coming to the authorized dealer along with the shipping bill. This is a statutory document issued by the customs, and this should be in accordance with the foreign trade policy or the Exim policy, issued by, framed by DGFT, which is coming under the Ministry of Commerce, and which is coming under Government of India. And AE code, they can ask 2-3 times, they have asked. IE code is issued by the DGFT, issued by the Director General Foreign Trade. IE code, that IE code, they are the person who issues, and the format is now online, that is forwarded by the banks. And DGFT is full form is Director General Foreign Trade. Then the finance part of a bill, because the goods will be controlling, the flow is like this. Finance is Government of India, with under that comes the Ministry of Finance. From under that, below the Ministry of Finance comes the Reserve Bank of India, and they are, the FEMA is the guideline RBI is following for controlling matters relating to foreign exchange. That AP is coming, that the authorized persons or the dealers. So authorized dealers are doing for export-import transaction based on the instruction given by RBI, based on FEMA, and coming under Ministry of Finance, and coming under Government of India. Okay, thanks. Short question they can ask. What is the export declaration form? They can ask. You see, now everything is shipping bill only. Earlier, the 2-3 way, the export declaration form in non EDA, that is not fully computerized. Now, Softex is for software exports. So, Softex, they can ask for the objective question. What is the export declaration form issued for export of software? Answer is Softex. Then all other goods now it is shipping bill. Shipping bill is being given. Earlier it was statutory declaration form or export declaration form. Now everything, all the ports, whether it be seaport or airport, it is fully computerized. Now they are issuing the SB. We call it as shipping bill. Then exemptions they can ask. Trade samples, personal luggage of travelers, and suppose some samples that you are sending off for testing, right? It is exempted category, that you have to just read our IB's note. It is clearly given. Definitely there's a chance they can ask that exempted category for the statutory declaration form. This gift up to 5 lakhs. This also just bear in mind, they can ask up to 5 lakhs. It is gift up to 5 lakhs is exempted from statutory document. That bill is not required. So this bench, these points you should be bearing in your mind. Then this very important, exchange control copy to be submitted to the authorized dealer, authorized person within 21 days. Customs copy will be retained with them. All the documents, customs certificate that we call exchange control copy should be given to the bank within a period of 21 days from the date of shipment. From the date of shipment. This is RBI also is stipulating, FEDAI is stipulating, and also articles also within the document should be given within 21. All original documents should be given within 21 days. This is stipulation. Then the time norms also definitely in objective they can ask. That is submission of documents 21 days from the date of submission. Then realization of export bills. Now 9 months now because of the COVID pandemic. Now it is being extended to 12 months. Earlier, all the repatriation of proceeds should be done within 9 months. Now, because of the COVID pandemic, it is 12 months and 15 months in respect of warehouse facility available. Suppose Minerals and Metals Corporation, they will be doing large volume where the amount is very huge. For them, the 50 earlier also it was 15. Now the same is continuing. Only the 9 months is changed to 12 months. This probably definitely they can ask because all the earlier examination related to Forex, all the COVID change they have asked. So just bear in mind, there is a possibility they can ask this. Then value date. Already we have seen the date of credit to nostro is known as the value date. Value date. Next is how the prescribed methods of payment. That is how you can receive the proceeds of export. Nostro credit, that by a draft, travels credit card, currency when the foreign the importer is personally coming, he can also, it is a theoretically only just study that. ACU countries, you know, Bangladesh, Myanmar, earlier Burma, Pakistan, Iran, Sri Lanka, there is permitted AC that like a separate designated account is maintained. So because just for inferring that what is the total trade volume that is being done through them. This very, very important. Nepal and Bhutan settlement is possible only through INR. For Nepal and Bhutan, foreign currency is not permitted. Settlement only by terms of INR. The designated banks are there. Through that, the credit will be received. Then what are the facilities available for the exporters? Agency commission can be allowed if it is whatever is, if it is allowed in the shipping bill, we can permit. Reduction in value 25% of the value. Any percentage, if it is more than 25%, the ceiling is up to 5% of the last 3 years turnover. You have to get a chartered account certificate. Then another most 3 forms are there earlier, ETS, extension of time. Now everything is due through the system, EDPMS. Earlier it was manual, up to 6 months, beyond 1 year we have to extension of time, we have to up to 6 months. Authorized dealers they can allow. If it is beyond 1 year, up to 1 million we can allow. Otherwise, we have to get RBI's permission. Now this is done through EDPMS, Export Data Monitoring System. And then limit write-off is up to 10% of the total export proceed realized within that. This is without referring to RBI, we can do it. Then facility to exporter, diamond dollar account. That is good track record of 2 years, turnover is 3 crores, maximum fine account. That is, they can open only current account, and you can, that is, suppose whatever amount that you have received in January, before the end of February, you have to utilize that amount. Otherwise, you have to convert that. So this also 3 crores and 5 accounts they have asked in the examination. So just these points also you just note down because these are all benchmark limits you should be aware of. Then EFC, exchange earners foreign currency. A person on the whatever amount that he is receiving on account of exports, 100% can be retained in this account. That too only in current account, non-interest bearing. We are also saying that is it can be retained only for 1 month. Whatever amount EFC amount that you have received in March, next month before April end you have to utilize. Otherwise you have to convert. This is a facility allowed by Reserve Bank of India to the exporters to escape from the exchange rate fluctuation risk. So to the extent of foreign currency they are holding, they can make the sale transaction or import transaction. It is for enabling them. This account is facilitated. They should not use it for speculation purpose. That is why they said if it is not retained with more than 1 month, you have to convert because of that stipulation. They should not be put to use for speculation purpose. RFC is any person returning to India. Current account SP, these are all interest bearing the RFC. RFC-D is by resident. It is non-interest bearing account, current account. Suppose you are the consultation fee like that you're getting, that you can, that is RFC domestic. This is interest. This is the only interest bear. Question will be, can a resident, question for the examination, they will be asking a question like this. Can a resident Indian open a foreign currency account? Most of the persons are telling no, no, no. It is easy. These are the account open, foreign currency account opened by the residents. All these are opened by the residents. So bear in mind, because in so many classes also I have asked, can you open a foreign currency account? Can a resident Indian open a foreign currency account? Most of the person immediately tell the answer no, no. So you see that these are all accounts that can be opened in foreign currency by the resident India. Export finance, that is mainly is export packing credit finance. It is the working capital facility. Already we have seen two types now. Almost everybody is given running out facility. That is for satisfactory customers who have got very good track record. For who have got a maintain an account for 1 year, we will be giving a running account. That is all the orders will be pooled together. That is running account. Then interest is such concessional rate. If not closed within 60 days, that is, it will be void ab initio. Right from day one, we will be charging the penal interest. Then packing credit is requirements KFC, that is KYC is required. IE code is must. Then this is another point you have to bear in mind. That is, you have before giving any credit, let it be any credit or packing credit, any credit related to export also, we have to ensure they are not in the specific approval list of ECGC or caution list of RBI. If they are finding a place in this list, we have to obtain the sanction before giving the advance. It doesn't say that you should not give the advance. You have to get the approval from ECGC and you have to get the approval from RBI before giving the advance. Then should have a firm export order or LC. Based on this only, you will be releasing the advance, extending the credit facility. Then advance only on FOB value. Already we have discussed only a free over board only. That is a value based on which we extend advance. That CAF we have to convert to FOB. That if suppose they are not giving you the percentage, we will be taking 14% by and 25% by year, and period depend upon the circumstances, depends upon the nature of the product. Then export finance actually is a post shipment and pre-shipment. Post shipment is that you will be by way of discount only. Requirement is same KYC and IE code, and same thing ECGC, they should not be in the SAL or caution list of RBI. Then period is side bills NTP 25 days and Usant bill inclusive of NTP maximum 365 days. Then export packing credit PCFC, that is packing credit we can release in foreign currency itself. That is source for that you should have the foreign currency fund. Main source of foreign currency fund for the bank is from EFC. Already we have seen the exporters can park their foreign currency in current account. So that is a source of foreign currency for fund. So we can utilize the fund from that. FC not deposit RSC, RSCC. Period is 6 months. LIBOR is this. They have asked last month there was one Forex certificate in examination was there, and that they have asked this rate. LIBOR plus 250. Post shipment is we call it as EBR, export bill rediscounted. PCF should be liquidated. That is, suppose a person, one thing that you have to understand and bear in mind is a person wherever the pre-shipment credit, suppose a person has taken in foreign currency, compulsorily the bill should be discounted under foreign currency only. Out of this proceeds, the pre-shipment credit should be liquidated. Then facility, IE code, already we have seen that IE code, whenever an exporter, importer is coming to the bank, we have to verify whether he has an IE code and the goods that he is intending to import is not a banned item or restricted item, or whether it is coming under the OGL. If it is a banned item, suppose example human skin, peacock feather, we should not permit. If it is a restricted item, he has to obtain an import authorization from the DG, import authorization, or we call it import license. or now the new name is import authorization from the DGFT. If it is OGL, we can the foreign trade policy. We can verify all these things from the foreign trade policy. Already we have discussed in the foreign trade policy issued by DGFT. In that, the list of items are fully there. You have to verify. Then import authorization, that for the restricted category, import license. And here one point that you have additional point that I bear in mind is the import authorization is issued in CAIIB value. Just like FOB for imports, or FOB for exports, this is CAIIB value for imports. The crystallization import bill as per the bank policy. Already that also we have seen. Then evidence of import, we have to get bill of entry within 3 months. Now that is being done through IDPMS, import data processing monitoring system, just like here. All the statements are also now done through IDPMS. Then advance payment of imports also bill of exchange should be received with 6 months from the date of remittance. A facility for the importer. That is form A1 is actually whenever you are releasing foreign exchange, two forms are there. This is form A1 is payments release of foreign exchange connected with import, and non-import it is A2. Now this A1, that is all the release of foreign exchange connected with the import is dispensed with, not required. And regarding A2 up to 25,000 US dollars, this benchmark they can ask for the exam. This benchmark they can ask for the exam. Up to A2 it is not required. Above A2 only, above $25,000 only, or equivalent. If it is any other currency, equivalent of this, you have to insist for A2. For transaction less than this, we have to obtain a dummy A2. Two statements relating to that is export bill outstanding. Now that is reported to EDPMS. So is the export bill outstanding. Once the bill you are not getting the proceeds, even if it is a collection bill, once it is outstanding on the due date you have not received, you have to report through EDPMS through the system. Next is factoring. Factoring is a receivable finance where a factor person will be, as per the arrangement, one factor will be giving you the advance up to the extent of 88%, and in turn you will be assigning all the debts to him. On the due date he will collect that, and balance amount will be done. So this is facilitating that this arrangement is known as factoring. The factor is the person who gives you that advance up to the extent of 80 to 85% already prior. So this is a win-win situation for both the creditor or the business entrepreneur, because otherwise you have to go for bank finance. Now you are getting 80%, which you can, and also the most important is entire that debt administration, debt collection, debt management, everything is done by the factor. So this is a benefit of both are receivable finance. And in respect of forfeiting, it happens in that is in the export industry, where you will be getting 100% in advance. So difference between factor and forfeiting is here you will be getting only 80 to 80% in advance, and this is with or without recourse. Suppose the person is the factor goes on the due date to collect on the debtor, they are not making the payment. If it is with recourse, he can come to the factor, the creditor, and get that amount. But in forfeiting, is it always 100% you have to give? Not only that, it's always without recourse. And forfeit, these are the two differences between factor and forfeiting. Then ADR and GDR, American Deposit Receipt. This is a deposit receipt issued by a foreign bank known as depository bank, and the currency is dollars. And what does the depository receipt represent? It represents a fixed number of shares of a reputed company in India. Suppose to tell an example, TCS has issued some 500 shares. So against that 500 shares, one deposit receipt will be issued by a bank in America, that is known as depository bank. That receipt is known as depository receipt. It's designated. That will be traded. And who will be holding this actual share? The actual share will be held by an agent of the foreign bank, American depository bank, that known as a custodian. Just similarly, global deposit receipt. Difference is here, ADR is only in US dollars, they are both in dollars and crystallization already we have seen, and EDPMS is export data processing monitoring system. That is through the system. That is, all the banks have gotten access to this, customs have gotten access, then RBI has gotten access. So that is effectively monitored. So EDPMS is a system that is monitoring all export transactions, and IDPMS is the system that controls monitoring all import transactions. Got it. Then next is ECB, external commercial borrowing. That is anything that amount that is obtained overseas. And any overseas borrowings, if it is more than 3 years, we call it as ECB. If it is less than 3 years, we call it as trade credit. Here, that for the examination point of view, these benchmarks are very important. That is, what is the rate? 450 basis point. And automatic route means without intervention, without permission of RBI, you can avail up to $750 million. Above $750 million or any other currency equivalent of this, you have to obtain RBA. That we call approved route, approval route. So out of this benchmark, they can ask. So here, this 3 years, 450 basis point, 750. These three things are very, very important from the examination point of view. Then I told you, any credit less than 3 years, we call it as buyer's credit or supplier's credit. Here also, the automatic route, without referring to RBI, authorized dealers can give up to 150 million for oil, gas, refining, marketing, airline, other companies. All others, it is 50 million. Usually, they are asking this question. This 50 million eligibility, you should be thorough. And the interest will be benchmark rate. That is whatever is the benchmark, LIBOR or whatever it is, that plus 2.5%. That is 250 basis point. Period is 3 years for capital goods, non-capital goods 1 year. That depends upon the nature of the product. Then precisely, what is a buyer's credit and supply? Both are import finance. If the finance is arranged by the supplier or the importer overseas, we call it a supplier credit, or the same credit at the foreign sender is arranged by a bank in India or that importer's bank, we call it as a buyer's credit. That is a difference. Next is then important provision in the FEMA for remittances. Actually, as for FEMA rules, all these details come under the FEMA rules. There it stipulates some share-only transaction where the transactions are prohibited. That is, an authorized dealer should not release foreign exchange for any purpose that is mentioned in Schedule 1. That is lottery, winnings, gambling. For that, we are not supposed to make remittances. Schedule 2 is transaction which require approval from the government. Example, suppose a dance party is approaching you. They say that we are going a team of 40%. We want foreign exchange. They should get the permission from the Ministry of Cultural Affairs. Schedule 3 is the permitted category. We can release foreign exchange. Then another question from the examination point of view is Nepal, Bhutan, it is prohibited. Already we have release of foreign exchange is not permitted. And very important, if suppose a person traveling to Nepal, if it is 100 rupees and above, the limit is 25,000, and below 100 rupees notes, 50 rupee or 20 rupee, 10 rupee, there is no limit. So this 25,000 is, if it is suppose he want to carry 100 rupee note or above that denomination, then the limit is 25,000. That bear in mind. Then this also they can ask for that. What is the currency amount that is a limit which can be released? $5,000 for travel to Libya, Iraq, and Hajj. For Hajj pilgrimage, the limit is 250,000, or the Hajj committee will be prescribing a limit. Up to that limit, you are in order in releasing. All others, $3,000. All others, 3,000. The objective type, they can definitely ask. And unspent amount should be surrendered within 180 days. And the resident can retain 2,000 currency coins. More than this within 6 months, that is within 180 days, they have to surrender. Suppose they are asking this amount where you can credit RFCD account, that is resident foreign currency domestic, RFCD, you can remit this currency. But that should be maintained in current account. Thanks. This is also very important. Suppose a person is returning to India, how much foreign currency he can hold? That is notes up to 5,000. If suppose he is bringing 6,000 currency, he has to declare currency declaration form. Or travelers check more than 10,000, we should get that. Or this put together more than 10,000 also, CDF should be obtained. So one question practically they can ask. Suppose a customer is bringing foreign currency, total is 7,000, of which currency note is less than 5,000, it is not required. Same question. Suppose a person is returning with currencies $6,000, of which currency note itself is 5,500. Then this should be obtained because it is exceeding this limit. Then import of export of INR means that is Indian currency that can be taken from India and back to India is 25,000 INR. That is, but the terminology is import and export. That is how much INR you can take with you, how much you can bring back. That is 25,000. That's LRS, liberalized remittance scheme. That is for all the individuals, including minors, they are permitted. This limit, bear in mind, from 26/5 onwards, it is $250,000 or equivalent of any other currency. And purpose also is any capital account or current account transaction or combination is permitted. And this is, we should not give loan for this LRS, and Form A2 to be submitted the designated branch. Now this is because it is permitted to avail to any branch because of the computer thing, you know, that it is possible for RBI to find out. Earlier it was stipulated that throughout the year, where you have started obtaining that throughout that financial year, you should only approach a single branch. Now it is not that. You can obtain from different branches. Then there's a close relative loan is permitted. Only that it is the period is 1 year and no interest is allowed. The loan should not be used for cheat. Already we have seen. No A2 for transaction less than 25,000. LRS is only for individuals, not for corporators. With this is also, then we have got 2 more slides. ECGC, you can see that slide now?
Yes, sir.
Yes, okay.
Yes, sir.
So ECG also, you see, only sample questions we can discuss for 10 to 15 minutes. That is enough.
Can you please put it full screen, sir?
Because you see.
The slide, can you please put it full screen?
Okay, okay. Right. Done. Thank you.
Yes, sir. Thank you.
Here, buyers, the buyer is, they can ask, this is risk faced by the seller is known as, example, they can ask in the objective. There is a non-acceptance, non-payment by the debtor. Here, what you have understand is, buyer risk is the risk faced by the seller, opposite person. That we call it buyer risk. The nature you should be aware of because objective they can ask. Seller risk is risk faced by the buyer. Example, not shipping of goods after receipt of advance payment, delayed shipment, inferior quality. Then shipping risk also, their example is risk due to intermediaries, international trade, shipping company, agent, port authorities, etc. Mishandling. So this is from the objective question angle, this is enough. Next is, what are the other type of risks? This bank failure, settlement risk, risk of competition, price risk. These are all that comes under the other risk. So mainly in the international trade, 4 types of risk are there: buyer risk, seller risk, shipping risk, and other risk. Next question is, that is, what are 7-fold classification based on which? What are the 7-fold classification based on which risk is determined? This is A1, A2. This one. That is, A1 is insignificant risk, A2 low, B1. How these parameters are fixed based on the earlier external data, economic policy, currency volatility, inflation. Based on this is the risk category. Based on which the premium also is determined by the ECG. Just have a note of it. Another point you have to notice very important is this one. What are the commercial risks? Definitely they will be asking. Commercial risk covered by the ECGC is insolvency is covered, then protracted default by the buyer is covered, repudiation, that is failure to accept. These three risks are covered under commercial. These three risks come under the commercial risk. And the political risk means due to imposition of restriction by the government, war, revolution, civil disturbances. So just to understand what are the nature of this. These two risks are covered under commercial and political. Objective, definitely they can ask. Then more than that, more important is ECGC cover, for which it is not available. That commercial dispute, that is any disputes due to the causes inherent in the nature of goods, buyer's failure to obtain nature, then insolvency of the agent, these risks are not covered under ECGC. Another point that you have to bear in mind is what is a discretionary limit. Suppose what is a discretionary? Suppose when you are giving an advance, let it be a new advance or a ad hoc advance or a that is increase in the limit. That whatever it be, it has to be notified to the ECGC within a period of 30 days. Even if it is ad hoc limit, it should be immediately. That is known as a discretionary limit. Then what is the notice of default? That is within 4 months from the due date or 1 month from the date of recall, you have to file a notice of default with the ECGC. If you are not filing this, suppose in need, a need comes for filing the claim, they will not honor it. So it's very, very important. And the period, the 4 months from the due date, they can ask in the objective. Next question is 6 months from the date of lodging. That is, a claim has to be preferred within 6 from the date of lodging the default notice. If you have not filed the default notice, you will not be able to file the claim. That's these are the various policies issued by that. For example, question is, you see here some policy, small exporters policy. Here the limit is only for the, if it is less than 50 lakhs, the coming 12 months, coming 1 year, if the total turnover is expected to be 10 than 50 lakhs, then for those such exporters only ECGC issuing the policy. And the policy is issued by the ECGC for the exporters, and guarantee is that whole turnover guarantee is issued for the banks, both pre-shipment credit and post-shipment credit. So these are the various policies. We have to just go through the policy and just understand what is the limit. So say for exporters, 10 lakhs premium. So they can ask in the question, the export turnover policy is only for exporters who pay a premium of what is the limit, 10 lakhs. Like understand the important points. These are from the examination point of view, these figures are very important. Next is packing credit insurance. The transfer guarantee, another thing. This is issued bank against the possible losses on account of adding confirmation. When you add the confirmation, already we have told the credit risk you are shouldering. So when there a necessity comes for you to add a confirmation, compulsory you have to ensure a transfer guarantee is taken. So just understand what purpose it is taken. Just like that, exchange fluctuation risk, maturity factoring, every purpose it is there. And open cover, then total cover. Okay. So these are from the ECGC point of view. Next is last slide. Last slide, FEDAI guidelines. Are you able to see Exim Bank?
Yes.
Oh, this is the last slide. Okay. So Exim Bank also just all the slides will be shared. Just to go through that, that is enough. What is the Exim Bank? Which activities are coming, and what is their program, financial program? These are the loans to foreign. Actually, they are promoting exports. For that, they will either finance if, any entity or any corporate or any unit here, or even outside. They will promote. Ultimately, suppose they are overseas, they are promoting imports, means that imports is for goods from India. So naturally, it will have an impact on the exports. That is it. Okay, defense of India rule. Very important is FEDAI rules. FEDAI rules. So already this will be a recap of what we have done so far. The rule actually, FEDAI has got 8 rules. 8 rules. Number FEDAI, they can ask. It is a what is the status of FEDAI also they have asked. It's a self-regulatory organization. In the objective they have asked self-regulatory organization, not a regulator. Regulator is Reserve Bank of India, SEBI, IRDA are regulators. Here they say it is a federation. They say actually Foreign Exchange Dealers Association. All the members are formed by the members. All the banks in India, including foreign banks, which are all dealing foreign exchange, is a member of FEDAI. And another question is, it is formed under Companies Act. Companies Act. So only 3 questions we can accept from that. Then going to this rule 1, questions will be trading hours. Questions can be, what is a known holiday? Question can be like this. What is a known holiday? Known holiday is, at least you know that before 3 days, at least 3 days, because of the spot transaction. Suppose Monday you come to know that Thursday or Friday is a holiday. 3 days interval is there. So such holidays we call it as known holiday. Any other holiday we call it suddenly declared holiday. Suppose Monday you are going to the bank, you come to know that Tuesday or Wednesday is a holiday, then it will become suddenly declared holiday. The rationale is spot transaction and payment settlement of transaction should be done. To avoid OD interest, this is being enabled. Another question is, normally transactions are not done after 4:30 because we will not be able to cover it in the market. Any purchase should be offset by a sale. Any sale should be done by through a purchase, cover operation. So or the market will be closed. That is why normally we will not be able to do merchant transaction after 4:30. But any transaction, cross currency trading and all is possible after 5 p.m. Only you have got a board approval to that effect. If the board has a policy, approved policy from the board is there for doing cross currency transaction after 5 o'clock, it is permitted, you can do it. Only 2-3 questions from this rule 1. Next, coming to rule 2. Here, what is the rate for export transaction? The exchange rate for export transaction. Option A will be bill buying rate. Naturally, by default, we should not go for bill buying rate. Bill buying rate is correct, but suppose answer option A, B, C, D. In CD, it is telling bill buying rate or contracted rate. Contract means forward rate. Then that is more correct, because even for an export transaction, it is a purchase transaction, you can book a forward. That is what it is meant by contract rate. So this is a place where you can go wrong. You got it? Because the exchange rate for an export transaction is option A, bill buying rate. Bill buying rate is correct. But when you look at the option D, it clearly says bill buying rate or contracted rate. Naturally, option B will be contracted rate. So just that is why earlier I told you, before finalizing an answer, just mentally come to an answer. Oh, this is the answer is correct. Just go through that other answers also. Just to ensure that is not correct. Whatever that you have selected is more correct. At that time, you will be able to find out D. So contracted, this is more correct. Even though bill buying rate is correct, here that most pertinent answer is bill buying rate or contract rate. So just you should be very much watchful. And crystallization at what rate is? It is a TT selling rate. It is TT selling rate. It is that. Another question they can ask is NTP 25 days. Then NDD, notional due date, is NTP plus USAN. They can ask, and what is the due date for fixed due date bills? Only the USANs. And what is a fixed due date bill? Here, the due date is calculated from the date of the bill of exchange or bill of lading. If the due date is calculated from the date of bill of lading or date of bill of exchange, it is known as fixed due date. There, it is only USANs is given. This normal transit with the 25 days benefit will not be available. The bank should pass on the credit to the customer within 2 days from the credit to the nostro account. This also they can ask. What is the period within the 2 days credit? That is 2 days from the value date. You have to, that is why it's the FCNR account are given value date from value. That is, you will be giving the opening the account with effect from the value date. That value dating will be done. Okay. These are the possible questions from Rule 1 and 2. Next thing, Rule 3, say retirement of import bill. There also we can say, because it is bill selling rate or contracted rate. Here also we should not mistake, because option A will be bill selling rate, option B will be contracted rate, option C will be, say, TT selling rate, option D will be bill selling rate or contracted rate. That is the most pertinent answer. So that crystallization of import bill also is as per the standard policy of the bank, as per the stated policy of the bank. This will be, and another important thing is, all these norms should be clearly made known to the customer. Customer should be always aware of all these things. Actually, all the bank's policy guidelines, policies will be in the bank's website. Next, coming to this. In Rule 4, the possible questions will be the rate for the outward, that is TT selling. It's a selling transaction, so naturally TT selling rate will be, or contract rate. Why we are taking contract rate? We have seen in a slide that even an individual can book a forward up to $1 million. I can book a forward for $1 million. So at that time, suppose I am expecting any inward remittance, or I have to make any outside, means outward payment also. Any inward or outward remittance, I can book a contract. Rate for inward remittance is TT buying, because it is covered transaction. It is a covered transaction, no risk is involved. Right? It's the best rate for the customer, or contract rate. And this is also another question, possible question. This $10,000 can be converted immediately. Here the point that you have to remember is, it is unless an instruction is there to the contrary. Merely the Rule 4 says that you can convert up to 10,000. Suppose that customer has requested to, suppose the amount that you have received is $5,000. Based on this, you should not convert without asking the customer. You have to ensure that customer has not given any instruction. Because suppose the customer has intent to open a FCNR account, then you will not be able to open. So unless an instruction is there to the contrary, you can get guided by this $10,000. If it is more than $10,000, without getting written confirmation from the customer, you should not convert that, because the conversion will amount to loss, because you have to go for the reversal of the entry. Then compensation to be, if they're not paid within 2 days of the credit to nostro. Value dating should be given. If you are not giving, then compensation should be given. So these are only 2-3 questions can be expected from this Rule 4. Then coming to Rule 5, Forex contracts. The Forex contract, it should not cross over 1 month. That is, 1 month being 18th January to 17th January. It cannot be 18th January to 19th January. It cannot be that. Then February last day, that is January 18th January to 17th February, or month end to month end, 31st January to 28th January, or month beginning to month beginning, January 1st to February. So the period is because it's to have a commonality among all the banks. Then due date, this is very important. If the due date of delivery falls on a known holiday, when it will be paid? I can ask for the examination definitely. It should be paid on the preceding day. If the due date of delivery falls on a known holiday, if you know it is a holiday, that is before 3 days, after 3 days, you get the period of 3 days. You get the notice of 3 days. On such cases, it has to be paid on the preceding day. I will tell an example. Monday, you come to know. Friday is a holiday. It's a known holiday because you have got the benefit of 3 days. You come to know the holiday before 3 days. So it is a known holiday. So Friday is a holiday. So the payment has to be settled on Thursday. If it in the respect suddenly declared holiday, it is possible to set only on the next day. That is example. Monday you come to know that Tuesday is a holiday. Then it can be settled only on Wednesday. Next one. Next. Direct quote to be forward for merchant quote or the merchant transaction already. That is, what is a direct quote? $1 is equal, one foreign currency is equal to how much INR? That is direct quote. Then rule 6. What is early delivery? If it is paid before the due date, we call it as early delivery. And as far as a Forex transaction, we have tied up, we have heads, that is, we have made the cover operation only on the exact due date. Suppose I have to get the payment on 31st March, I will be selling on 31st March. I have booked a forward for 31st March, I would have booked a forward sale. If it is a forward purchase on 31st March. So the delivery date should coincide normally because I have already done a cover operation. Suppose a delivery is done early prior to that, I have to do another deal, 2 deals, one to counter this deal. Suppose a sale happens early, I have to offset that, and I have got a commitment to purchase on the due date. For that also, I have to provide funds. This is known as swap cost. That is a cost that you incur to set off that, adjust this is known as a swap. So the bank can recover or pay the swap difference from the customer. For extension of the extension means, suppose on January I have booked a 3 months forward contract falling on 31st March. Now the customer says I cannot do that. I have to extend for 3 more months. That is 30th June. Then you cannot roll over. You have to cancel that for 31st March. Then I have to book a fresh another forward for another 3 more months. The ending 30th June. That is extension of account. Cancellation and rebilling should be done simultaneously. Then cancellation to be done at the TT rate. That is the FEDAI guidelines. Difference between contract rate and cancellation should be paid to the customer. Depending, already we have told you. That is in respect of forward purchase contract, the rate is the lower than the contract rate. That the cancellation rate is lower than the contract rate. It will be profit for the customer. If it is otherwise, if the cancellation it is more, it will be loss for the customer. And FSC opposite of this. Another probable question is automatic cancellation 3rd working day. If the customer is not delivering on the due date, automatically the contract will be cancelled on the 3rd working day, and whatever is the loss will be passed on, profit will not be passed on. Soft cost to be recovered and contract cancel after maturity, the exchange difference that is favor profit will not be passed on. Then rule 7. This details about the deal that you will be putting through the intermediaries, that is broker. Here the possible question is brokers, already I have told you, it should be accredited by the FEDAI. Or the Forex broker, or they also come under the regulations of FEDAI. No Forex contract should be made between intermediary as a principal. That is, they should facilitate only as a broker between bank as a principal. Bank should always be, the principal should always be a bank, that who is an authorized dealer. He should not do a deal on his own name. That is the essence of it. Last rule is rule 8, interbank settlement. That is, if the interest is delayed, it should be at what rate you have to pay. Already it is determined by the FEDAI. INR, BIBOR, Mumbai interbank offered rate, overnight, whatever is the rate, that plus 2%. Suppose there is a delay of say 10 crores rupees. What is the interest rate you have to pay for? Suppose the delay is 2 days. You have to pay whatever is the overnight mobile rate is 7%, means 7 plus 2, 9% interest rate you have to pay for the 10 crores for 2 days. If the currency is GBP, the base rate of Barclays plus 2%. If it is dollar, prime rate of Citibank plus 2%. So this was the then is something of okay. So we have just closed up, quickly gone through all the provisions. Now, whatever is a doubt that you have, you can ask. It's a refresher. I went very fast because most of the questions you will be knowing definitely. Only from the examination point of view, how you have to think. Because already I am sure that you have got the knowledge of all these things. Only as I told you that in the examination, next never jump to. You will definitely you have sufficient time. Think that calmly, ascertain that answer. Also ensure not only but also not only that you are sure this answer is correct, but also ensure that other answers are not better than this. TT buying, etc. Once TT buying, okay. TT buying rate is applied for 5 days. 5 days. Advising. Here that advising bank it should be within 5 days. Another question related with I will answer. The confirming bank, you know, the details of all the other rates I will tell, TT rates. The confirming bank, it is my discretion. Suppose I am the advising bank, that opening bank cannot instruct me or ask me, force me to add the confirmation. Adding the confirmation is sole discretion of the negotiating bank. But only that, suppose I have elected, I have decided not to add the confirmation, I have to inform the LC opening bank immediately via SWIFT. That's the only point. And details of TT buying rate is wherever that you have got a covered transaction, where the funds has been received, we will be applying the TT rate, TT buying rate. Bills buying rate selling, it should be okay. Wherever the bills buying and selling, okay. Bills buying being inflow foreign export bill is a bill buying transaction because foreign currency inflow for the bank. That's a bill buying transaction. Bill selling transaction is import bill retirement, import bill payment, because you have to make the payment to the foreign person from where you have imported in foreign currency. Your customer will give you INR, home currency. So you will be debiting his account, and that is a foreign currency outflow. That is why we got. Then what is this? The currency date of month. For forward premium date of the month will make the difference. That is actually in forward premium. If it is for the full month, in buying transaction we take for the up to the previous month. Suppose a customer is entering to a contract for a forward. The delivery is full month of say February. The premium up to January alone will be given, because it is for the full month. We are not sure that whether he will give on the first day of February or last day of February. Then any other?
Sir, nostro account means our account with foreign bank in foreign currency.
Yeah, naturally, our account in foreign bank, naturally it will be in foreign currency.
It's maintained in foreign country or in India?
Outside, foreign country in foreign currency. Example, I opened my bank, maintain an account with say Chase Manhattan Bank in New York. It is in a foreign country, foreign currency. You are absolutely right. It is in a foreign country, because if we are maintaining in a foreign country, naturally it is in foreign currency.
Sir, insurance 110% of SIPs or FOB?
Of FOB.
FOB alla?
FOB.
CIF or CAIIB value?
Sorry.
CIF alle?
CIF, 110% of the CIF for cost and freight or consumer freight.
Okay.
So the selling, that is a doubt. That is, if it is on August 3rd, what should we do?
August, that is depends on, suppose in the question they say that is it a specific date where the delivery is on August 3rd?
Yeah, in selling.
Okay. In selling
we can take to the last, but if it is August 3rd or August 2nd, it is the beginning of that month. So can we take it for the whole month?
Actually, if it is in the beginning of the month, you have to take up to that. If it is a premium on the previous day, previous only. If it is a buying transaction.
Selling is the doubt. Selling.
Selling actually you have to cut the pro rata. Play, Validhan sir.
Yeah, madam. Actually, what is your doubt?
Sir, actually selling, if it is a selling, we take to the last day.
Yes.
So if it is August 3rd, we are August 3rd date we need.
So, see. No. See, actually, if it is a particular date is there, then that is fixed date delivery. If fixed date delivery is there, suppose August 3rd, 4th, 10th, 15th, 18th, whatever it may be. So, in the case of sale or purchase, that is export or import, we have to take up to last month plus the pro rata up to that date.
For 3 days.
Yeah, okay.
Taking insurance.
Madam, the depend on the terminology. Suppose it is the first of the month means we have to calculate up to that 10 days. They would have given that premium.
Last. Okay, sir.
Depends upon the terminology.
Sir,
as Validhan sir has told, suppose if you know definitely it is on 3rd, we have to that full month premium divided by number of days. You have to calculate premium for 1 day. Then into 3.
Okay.
Sir, taking insurance, no, sir, on the CIF value, 110% of the value and 5% on goods. That
110% of the CF value.
Cost insurance is rate value 110%. Then 5% plus or minus you told, no, sir?
That is the value, that is the tolerance. That is, suppose you have got an LC, that amount is $1 lakh, and when he is submitting the bill, it can be either even if it can be $95,000 or $105,000. Merely the amount is different. You cannot say that it is a discrepancy.
So I will give an example.
What is the 10%, sir?
No, Ramesh, let me explain
10% is the amount, 5% quantity. Sir will explain. Okay.
Yeah, actually, one question was asked for JIB examination. You are having an LC of 8 lakh and the customer presented an export bill of 8 lakh 70,000. Whether you can negotiate it or not. So here is the 10% tolerance. That is, if there is a amount difference is there from the LC, up to 10% plus or minus we can tolerate. That is, anything between 7 lakh so 20,000 and 8 lakh 80,000 we can negotiate. That is as per UCBDC. That is 10% tolerance. If it is the quantity, it is 5% tolerance is there, because now LC the quantity and amount will be given, but after packing and everything there can be slight difference. So bank can tolerate up to 5% if there is a difference between LC and the invoice in the case of quantity, and amount 10% plus or minus this LC. So it will be asked like this only. It will be a case study type question will be asked. Then you should keep in mind that 10% amount plus or minus can go, and the quantity 5% plus or minus can go. It is clear. Is it clear?
If the quantity is exceeding by 2% means you can allow up to 5% in the quantity it is allowed. Amount wise.
But LC we do not deal with quantity only, no, sir. We do not deal with quantity only, no.
Suppose there is a difference, invoice is submitting and you find there is a difference in the quantity, then you should not take it as a discrepancy.
Suppose the LC is open for 10,000 kilo cashews, and the LC is for $1 lakh. See, 10,000 kilo cashew and $1 lakh. So when it is presented, it is only 980 kilo, and the amount is 9,90,000 or whatever it may be. So there arise the tolerance.
The unit price into amount will be that. No. So we should not trade in as a discrepancy. Currency position is whenever you are converting the currency by applying the exchange rate, we call it as a currency position. Suppose a customer is giving $1,000 and you are converting at the rate $75,000, $75,000 INR you are giving, then it will come to currency position. Suppose a customer is bringing $1,000, of which you are only converting $500. The currency position will take only $500. The remaining which you have not converted will not come under currency position. You got it?
Currency position is
That is
same as exchange position.
balance of trade and balance of payment, sir. Balance of trade,
Hello?
balance of payment. Sir,
Balance of trade is the difference between the exports and imports. And balance of payment
that is current.
includes of everything. All inflows, foreign currency inflows and outflows. Net difference is the balance of payment, which includes balance of trade also. In the
regarding
balance
this
of trade,
insurance,
only purely that
Budget to current account deficit is there, sir. That is balance of trade.
everything. Right.
No, current account, it is not balance of trade alone. Current account and capital account, that classification is there. Current account, capital account.
Current account deficit, sir.
Yeah. That is, see, first you should understand what is a current account and what is a capital account. Capital account means capital flow for foreign institution investment, foreign direct investment, ECB, buyer's credit, supplier's credit. All these are coming under this capital account. Whereas in the case of travel, tourism, medical, the export, import, everything is current account. So the difference between this is current account. If it is inflow is more, it is current account surplus, and if the inflow is less, it is current account deficit.
In balance of trade, sir, it is
only the difference between export and import only. That is different. Yeah. See, current account and balance of trade, you don't mix it. That is both are different.
Different. Okay.
So you got what is balance of trade and balance of payment? You got clear? That is enough.
So regarding the insurance, pre-shipment, after the shipment of the goods, insurance is not taken. It has to be taken on the date of shipment, or can it be taken before the shipment also? Insurance?
No, yes, but it should be effective from the date of shipment.
Yeah, okay.
It should be the insurance should be available from the date of shipment.
No, one case study can come. I will explain, because your LC is expiring on Sunday, and the customer is bringing on the documents on Monday, and he is naturally bringing the insurance with the date on Monday, because Sunday the insurance is a holiday. Can you negotiate or not? Actually, the article clearly says if it is an holiday, the validity period of LC get extended by 1 day, not a problem. But the insurance you cannot extend. It should be effective from the date of shipment. Suppose the shipment has gone on Saturday or Sunday, it should be definitely effective from the Sunday. You have to get the amendment.
Okay, sir.
If it is a holiday, the validity period of LC for negotiation can be extended for the period of holiday.
Sir, LC, it is to be preceding 1 day, no, sir? You said forward day now. Sunday, when you give an example, LC, if it is a known holiday, it has to be preceding.
No, because no, that we cannot sell, because he will be able to give the bill only after the formalities are completed. No, that is, so we cannot stipulate a date. He has to get so many documents. It is not in our control. What we can, once he is coming, because bringing to the bank the documents is not in our hand, but we can only stipulate within how many days he has brought. Because suppose he is bringing the documents after 21 days, that is 22nd day only he is giving. We cannot say that we will not negotiate, because RBI clearly says get a letter in writing. If you are satisfied with the reason of delay, you have to accept and negotiate.
Actually, he has to give it within 21 days of the LC.
From the date of shipment. Documents should be given to the bank within 21 days from the date of shipment. Suppose the goods have been sent, that is, goods have been sent from 1st of a month. Before 21st of that month, the document should be brought to the bank. 21 days from the date of shipment.
That is, exporter should give to the bank.
Bank, authorized dealer.
Okay. Authorizing bank, exporter should give.
Actually, the computation of one person regarding the working of days, depending upon the respective place. If 5 working days means, if suppose I am negotiating in India, 5 banking days of India. Suppose in US, it pertains to that number of days, actual working day, banking days there.
Okay.
Suppose there it will be holiday, here it will be working. So respective places, the number date should be taken. Yes, madam.
As a premium calculation, for forward purchase contract September month and the August le the matram editha pore. അതുപോലെ സെപ്റ്റംബർ ഒരു ഡേറ്റ് തരികയാണെങ്കിൽ ഓഗസ്റ്റിലെ പ്രീമിയം പ്ലസ് അപ് ടു ദാറ്റ് ഡേറ്റ് അങ്ങനെയല്ലേ എടുക്കുക? അപ്പോ ഈ സെപ്റ്റംബർ ഫുൾ മന്ത് എന്ന് പറയുന്നതും സെപ്റ്റംബർ 30th എന്ന് പറയുന്നതും തമ്മിൽ എന്തെങ്കിലും ഡിഫറൻസ് ഉണ്ടോ?
ഇല്ല, അത് നമുക്ക് അങ്ങനെ പറയത്തില്ല. അങ്ങനെ പറഞ്ഞാല് ഈ ഒരു ഫുൾ മന്ത് എന്ന് പറഞ്ഞാല് സപ്പോസ് എ പേഴ്സൺ സേസ് sorry but involuntary I was telling, no problem. That is, suppose here the madam was asking that if it is September 30th means 2 times it can be, that is any day during September means he can deliver on 1st of September or 30th September. In that case, we will be passing the premium only up to the previous. Suppose the question it specifically says date of delivery is 30th September, the customer is eligible for the premium up to 30th September. Got it? So we have to carefully read the question.
Oh, so we need to take August premium along with September premium, no?
No. September 30th means September cumulative premium they would have given. Only if it is coming in broken period, 7th, 15th, like that only, you have to add the pro rata period. Suppose it is last day of September means usually the premium will be given progressively. That seeing the progressive figure, you will be able to understand.
Sir, calculation of pro rata, sir?
Pro rata is, usually they do not ask, but theoretically you should know. Pro rata means total premium, because the premium for the month you can take, because difference between that September end and August will be the premium pertaining to September. That divided by number of days, that will be for one day. Suppose it is 7th or 14th into that number of days.
Anju, is it clear to you?
Sir, actually, a little bit confused only.
No,
you posted a question
Ramesh,
in the group now.
Ramesh, I will explain that once again.
Okay, sure. Okay.
See the premium or discount, always it will be cumulative. Suppose today it is December 22nd. January premium or first month premium means the premium from December 22nd to January 31st. Second month premium or February premium, what is given in the problem means the premium is from December 22nd to February 28th. March premium, if they are giving, that is from December 22 to March 31st. That is the forward premiums month-wise, it is given progressively. So if the question, it is particular date is given for delivery, whether it is export or import, up to that date, we have to pay the premium or discount. Full month means it is an option given to the customer. Full month means from 1st to 30th, on any day you are free to do the transaction. In such cases, in the case of exports, we will be giving less premium, that is previous month premium. And in the case of import, we will be charging the premium up to that month end. So that is the concept. Is it clear now?
Got it?
Okay, sir.
Yes, sir.
Sir, a time zone and explain time zone.
Pro rata 1 second.
The time zone is, if suppose in New York it is now open, it is working. Now it is closed here. So round the, because on the global we see that on the right side, eastern side, I will tell the clockwise. Early morning 3 o'clock, Japanese market that opens, Osaka market opens. After the Australian market. Then 10 o'clock Indian market. Then afternoon our 12:30 Frankfurt market. Then night 7 o'clock, our 7 o'clock New York market. By the time New York market closes, again Japanese market opens. So that is a time zone differences. So it's only
Three examples, no, sir. Frankfurt market opens after we closes. Can you please tell those examples, sir?
Yes, Frankfurt market is 12 o'clock. Afternoon 12 o'clock it opens. By the time it will be operating till 7 o'clock. when it closes, US market opens. When US market closes, Japanese market opens. When Japanese market closes, Indian market opens.
You just
That's
think about sunrise. Where first sunrise happens and where first sunset happens. So Eastern countries it will be first. So by the time it will be Japan is closed, then India will be about to open. Then during that time, London as well as Frankfurt, because 5.5 hours GMT we are ahead. So we here 12 or 1 o'clock London and Frankfurt will be opening, and after we closing by 7 o'clock US will be opening. So that is justly you think about when the sun rises at each country.
So premium rates you mentioned 1 to 3 months. For that, for first month, one red mark is there, and second month second slash red mark is there. Is there any differences?
That is the one is purchase, one is discount. How you have to
in purchase only you differentiate.
What's the first one is purchase and buy sell. A premium for the buy sell, discount buy sell. Both I have.
Okay, sir. Thank you.
If on Monday it is Thursday is holiday, it is non-holiday because we calculate from Monday onwards. Monday that deal is done. Then Wednesday that if it is a spot transaction, settlement will happen on Wednesday.
Valid date is there's no problem.
Sir, it is always the day. Sir, it is always the day when any Indian bank receives the LC. No, sir?
Any settlement on account of anything.
Your question is not clear.
See, sir, exporter has exported, we are buying that. That LC we have received, no, sir, when we negotiate it.
Yes.
The bills are submitted by the importer. We have to count.
Bills will be submitted. Bills will be submitted to the exporter now.
Ravi, can you please repeat it?
Sir, bills when we are receiving, no, sir. Imagine if there is one example in the book. 21st, 5 days the negotiation should get completed. 21, 22, 23, 24, 25. The bills we have received on 22nd January, which is Wednesday. Till the 5th day or something, till the day when it receives something like that, it was there, sir. We have to count Friday, Saturday, we have to remove. So when do we have to start?
Hello, boss, I understood that question. I have seen that question. If it is on Wednesday, so first day you exclude. Then Thursday will be the first day. Friday will be the second day. Saturday, Sunday you leave. Then Monday will be the first day. Tuesday will be the fourth day. And Wednesday will be the fifth day. Before the end of the Wednesday evening, we have to negotiate. We have to take 5 working days following the date of presentation.
Here, what is important is that Saturday and Sunday you can exclude for Forex.
Sir, 26th January is a holiday, Republic Day. We can count that also.
That also can be excluded.
That is the catch. Purposely, they will be asking a question like that. Or 25th December, they will be asking. Christmas,
Okay, we have to include that day. Do we have to include it, sir?
No.
You have to exclude all holidays.
That Indian Republic Day also we have to exclude.
Yes.
Then it will be the following Thursday. You said Wednesday, no, sir. That's why. 22nd, 23rd, 24th.
Right. You are right.
No, but you told that 22nd it is Wednesday, 23rd Thursday, 24th Friday, 25th Saturday, 26th. Anyway, it is Sunday and 26th.
No, sir. Actually, I am not seeing the book and giving the example. So this example I saw, I calculated.
No. Now you understood the concept. That is enough. No.
Correct.
You exclude following the day. You exclude our holidays. That is enough.
Exclude today. If the bill
following the day. Yes.
Next day. If it is
following, you have to start the calculation from next day. That is
next. Okay. The 5th end day. It is 5th EOD. 5th day EOD. Okay, sir. Okay.
So in between any non-holiday is there, that can be avoided,
Excluded.
then excluded, then Saturday and Sunday also can be excluded. That is the thing which you should keep in mind.
Yeah, sir. Yeah.
Okay. Good, sir. Good, thank you.
Any more questions?
No, sir. Thank you, sir. Thank you so much. It is really refreshing.
Thank you very much, sir.
Okay, thank you. Thank you.
Sir, and please, sir, please share the PPTs as well, MCQ, sir.
Okay, right.
Good night,
Already
sir.
there's in the group they have put it. No problem. Thank
Sir,
you.
unexpectedly
MCQ also, sir. MCQ also.
strike is there. Whether they are
Find out whether they're buying or selling rate.
Put some MCQ, sir.
Yes, sir. MCQ.
Daily you are seeing MCQs now. Now that systematically just calmly think whatever that you have, recollect whatever you have studied.
So
under act of God, some bunch strikes may fall, na, sir. They will take or not. That will consider.
For what purpose? For what purpose?
Under God, act of God is there, na, sir.
Bank strike.
Unexpectedly, there is a band in our branch working area.
Okay.
That may consider next day or not.
For what purpose, Sunil?
That is Ramesh, one thing that he is referring to Article 36. That is force majeure. So this riot, strike, everything
not considered.
Bank is not responsible.
Bank is not the LC. If any LC is the expiry date on that day, then it will automatically get expired on the previous day. This definitely one question is going to ask for your examination.
Yes, sir. I seen very frequently in previous questions also. That's why there is a different concepts in some internet are there, sir. That's why someone saying this is the unknown.
36 that force majeure that says that is acts of God, like this happens, terrorism, and the bank is not responsible. Suppose an LC is expiring on the day and the customer is not able to give the bank on the day because bank is not working. Next day only he is coming to the bank with the documents. Bank will not be able to negotiate. Law clearly article says that it is in order. We have to get that LC amended.
So that is the situation. Then how it will again? I mean, how it will he negotiate when, sir?
No, you have to get an amendment.
If the importer is okay, no, we can take it for collection. We can send
usually
it to the exporter.
You'll be sending a collection basis only.
If it is okay
after
for
getting
importer,
a sanction, I will convert.
Yes.
That is how practically we do it.
Okay. Thank you, sir.
Okay. Thank you all.
Thank you.
If it is over, let me wish you good night to all.
Tomorrow early morning,
Good night,
6:45.
Okay, good night.
Tomorrow 6:45 treasury management class will be there.
Okay.
6:45 again.
Okay, good night.
Okay, good
Thank
night.
you,
all.
sir. Yes, sir. Thank you.
Good night, sir.